China has unveiled more mortgage easing rules in an attempt to halt a slump in its residential property market and revive growth in the world's second largest economy. It will extend tax breaks for those who sell their homes and repurchase another within a year of that sale. The Finance Ministry also proposing to local governments that they scrap a rule that disqualifies those who have ever had a mortgage, even if that is fully repaid, from being considered a first-time home buyer in major cities. This would let more buyers access lower mortgage rates, as first-time home buyers are normally given better rates. First-timers are also generally allowed smaller down payments, as low as 20% of the total property value. Our Chinese stocks posted a knee-jerk rally on the news, but gains were erased within 30 minutes. The benchmark CSI 300 index closing 0.4% lower, while the Shenzhen component tumbled more than 1%. And how much will these measures actually help the real estate sector and in turn the economy? For more, David Chong, global market strategist at Invesco Asia Pacific, joins us. Mr. Chong, as you just heard, tax incentives, an easing on curbs for first-time home buyers, a slew of these measures. Now, we all know, or we all say, there will be no single silver bullet that will solve these problems, both for the real estate sector and by extension the Chinese economy. But will a string of bullets be what it will take to lift China's economy out of its malaise?
Hi, good evening. Yes, I think so. I think it will really require a number of these measures. We know that Beijing policymakers are not going to institute a large bazooka stimulus. They could if things get much worse, but I don't think that that's likely. And so it's really these cuts to the policy rate, 15 basis points here, rollbacks in some of the mortgage restrictions that should help lift consumer sentiment. But I don't think that this is going to really turn around the property market anytime soon. That's more of an issue with oversupply of property in China and also some of the developer financing. But I think what's currently being announced should help boost consumer sentiment in China.
Consumer sentiment. Officially, NBS, the National Bureau of Statistics, has stopped releasing figures on consumer confidence since March of this year, so we have no real measure for that. But I take it there are other measures that might suggest confidence is at least not going backwards in the Chinese economy.
That's right. The Bank of America China Consumer Sentiment Index was released today for the month of August, and it actually showed an improvement after many months of declines in sentiment. And I think that this is perhaps a canary in the coal mine that things might be turning better and getting better in China. Sentiment certainly has been bumping along the bottom for a while. We have been watching very closely what are the initial indicators for Chinese consumers to start to spend money first, and perhaps the sentiment index improvement is a first sign.
All right. If we look at real estate issues, local government debt, now these matters, these issues, these problems have been in the news, maybe not in the headlines, but in the news for years now. What has made them the big problems that they are now? Is this essentially a deficit in confidence or much greater structural problems that will require years, at least months perhaps, to resolve?
Well, I think that the Chinese economy is facing both cyclical issues, such as some of the low confidence because of the high youth unemployment and also the doldrums of the property market, but some of the structural longer-term issues, such as demographics and the limits of urbanization in China. And policymakers really have to come up with specific targeted policies in order to combat some of these headwinds. So far, we've seen targeted measures, stimulus measures for some of the cyclical measures, but we haven't really yet seen what are some of the longer-term structural measures that the economy can be dealt with.
All right, a final question here, Mr. Chow, and a little bit of pressure as well. Do you think this is just a post-pandemic hiccup, some pain, we will recover, maybe an inflection point, some restructuring that is necessary and has been necessary for a long time? Or is this, as some people are saying, the start of a lost decade for the Chinese economy?
I think that the pessimism toward China's economy is just a little overdone. That expectations might have gotten ahead of themselves, that China would experience a very sharp V-shaped recovery this year. We're not seeing that. No major economy has rebounded without fits and starts, and China is no exception. And a lot of this is very contingent on what Beijing policymakers are going to do next, what kind of stimulus measures that they're going to institute. Already, we're starting to see them. And I think that there's more to come.
Our thanks to that, David Chow, Global Market Strategist from Invesco Asia Pacific.